Hey, what is up everybody? Today we are talking about the top 5 stocks to invest in December of 2021 for the high growth potential. And we are starting right now. Hey, what is up everybody? My name is Shaun. I am a life, finance, and fitness coach helping people create life on their terms while maximizing quality of life in just 90 days. So be sure to check out my website, www.shaunsurgener.com for more information on that. You can also find me here on YouTube. You can find me on Instagram, LinkedIn, Facebook, and other social media profiles. Now, if this is your first time on this channel, welcome. Thank you so much for checking this out. If you haven't done so already, be sure to subscribe to this channel, hit that little notification bell, and as always, be sure to smash that like button for me. It would mean the absolute world to me. But let's go ahead and talk about the 5 stocks that you should be investing in December of 2021. Now, typically December tends to be a pretty good month for the market as a whole. And so if we look at the S&P 500, which is a pretty good standard for the overall market, 73% of the time the S&P increases since 1928. Now this month is going to be super important because this month kind of sets us up for the next year. So in November we saw a massive tear in the stock market. Stocks and companies were hitting new all-time highs day after day, and we're seeing some massive growth. However, we started to see a shift towards the end of the month, and especially right now where we have a lot of fears about the market uncertainty for many different reasons. We have the Omicron variant that has come about recently, and this has put a lot of fear and uncertainty in investors and the overall marketplace. You know, what's gonna happen? Are we gonna have another shutdown? We have really high inflation rates. And in fact, I just posted a video on this recently, so be sure to check this out on how to invest in an inflationary economy. Inflation is up 6.2% from this time of last year. And so there's a lot of fears around that. A lot of people are wondering what the Federal Reserve is going to be doing with all these different things. And we're also have a lot of concerns on supply chain and demands because of everything that's happening. So because of all this uncertainty, a lot of experts are thinking that there will probably be at least a 10% drop or more in the overall economy. Like I always say, where there is fear, there is potential. So let's talk about the 5 stocks that you should be investing in December 2021 that I think is going to give you not only some good short-term growth, but even more importantly, some really great long-term growth as well. These 5 stocks are going to comprise of about 3 tech stocks, 1 stock that is a newer IPO, and then 1 company that has been around for a very long time, a very massive company that I think is starting to be very overlooked at this point. Okay, so the very first stock on our list is Teladoc with the ticker price TDOC. Now, as of this recording, Teladoc is trading around $96 a share with a 52-week low of around $93 and a 52-week high of around $308. Now, one of the reasons why I think Teladoc is going to be such a great company moving forward is because of things like this Omicron variant and any additional variants that may happen going into 2022. Now, when the pandemic first hit in 2020, Teladoc shares skyrocketed. And I do think that with this pandemic, it has accelerated the healthcare industry moving towards telehealth in general. And I think this is a push we're going to be seeing going into this next year as well. There's a lot of reasons for it. Number one is that telehealth is so much more convenient than having to schedule a trip to the doctor. You can have 24/7 access and support to telehealth. So, you know, if you have a family or you have a really busy work schedule, you can put your kids to bed, do your family thing, do your work, and then at 10 o'clock, 11 o'clock at night, you know, phone into your doctor, do a telehealth visit right then and there. So it's a lot more convenient. And in fact, over half of the Fortune 500 companies are already signing up with Teladoc at the moment, mainly because of its convenience and the fact that it's so much cheaper than standard healthcare. Now, Teladoc has a lot of things in the works. They recently merged with a company called Livongo, and this company will put them in the driver's seat for digital chronic disease management. In addition, Teladoc has also launched a new product called the Primary 360 product. With the Primary 360 product, consumers are able to shop for their primary care physician through this exchange, and in that they are able to build a virtual relationship with their primary care physician over time. These kind of shifts that are happening because of this pandemic, and the fact that it was once trading at $308 and it's only sitting around 96 as of this moment, I do think you're buying it at a very massive discount, and I could easily see the stock kicking in 5 times over this next 10 years. So a very, very strong buy in my opinion. So the second stock on our list is actually a newer IPO, and that is Duolingo with the ticker DUOL. So Duolingo IPO'd around July 28, 2021 at around $141. It then shot up to $205 and is now trading right around $109 a share. Now there's a lot of reasons I think Duolingo is going to be an amazing buy in December of 2021 moving into 2022, and it's because they have so much momentum and they're making so many great decisions and choices along the way. They have been acquiring a lot of high-powered names to their executive suite team, and if you look at their stats and their numbers, their sales and all that, it's absolutely phenomenal. Their subscription revenues have risen by 42% year over year. Their advertising sales are also up by 34%. And their other revenues, which primarily has to do with in-app purchases, have increased by 179%. And their booking rates have increased by 57%. So even though most people know Duolingo as a language learning service, they actually have a vision far greater than what they are currently. And that is they want to have the best education in the world and make it accessible to absolutely everyone. And the current CEO even stated, "I plan to devote my life to this mission." They also recently acquired a head of animation and scripted content. So Linda Saminsky, who is the former content development chief at PBS Kids, is already sketching out animated shows featuring Duolingo's cast of characters. So as you can tell, Duolingo has a very, very big mission, and they are doing a lot of great things and driving a lot of revenue. And in fact, it's added 42% discount from the September highs. And this is why I think that Duolingo is going to be a phenomenal investment strategy in December of 2021, heading into 2022. Okay, so the third stock on our list is a company that's been around for quite a while and is a very, very massive company, but it has not been performing well over the last 6 years plus, and that is AT&T. Now, as of this recording, AT&T is trading around $23 a share, with a 52-week high of $33.88 and a 52-week low of $22.22. Now, most people on the surface would think that AT&T is a terrible purchase at the moment, and that is because over the last 6 years, AT&T has performed terribly. In 2015, AT&T tried to acquire DirecTV for $67 billion in its hopes to become an entertainment conglomerate, but during that course of time, they lost many of their subscribers, leaving them needing to sell their company DirecTV for a fraction of what they paid for. Now, to make matters worse, in 2018, AT&T acquired Time Warner for $109 billion. And as of right now, looks like Time Warner is going to be experiencing the same fate as DirecTV. Now, although previous investors have had a really terrible experience with AT&T losing a lot of money over the last 6 years, new investors can actually benefit from this because AT&T has a lot of things in the works. So let's talk about it. First, we have to remember that AT&T has a cash cow telecom business, and they're creating massive revenues. In addition to that, they are also acquiring a new company that's going to put them at the forefront of content, the major competitor in streaming services. Now, once this deal closes with this new company, AT&T is expected to generate about $20 billion annually in free cash flow. And this new company is expected to cash flow $8 billion by 2023. And so for that, I think now is a great time to buy at a highly discounted rate. Okay, so the fourth stock on our list is Mercado Libre, with a ticker of MELI. Now, Mercado Libre was founded in 1999 and has a current valuation of almost $57 billion with over 15,000 employees. Now, it has a 52-week high of 2020 and a 52-week low of 1,090. Now, Mercado Libre is a Latin American e-commerce business, and it has been doing exceptionally well over the years. Now, in particular, it's had a massive jump since the pandemic occurred. Gross merchandise volume has increased by 30% year over year. Its currency neutral revenue has jumped 73% to $1.9 billion, and its earnings per share jumped from 28 cents to $1.92, which is showing this company is rapidly growing and growing at scale. Now, what's great about this company is that not only does it have its e-commerce business, but is expanding into many different territories as well. It has a rapidly growing digital payment service called Mercado Pago, a business logistics services called Mercado Envios, and a financing sector called Mercado Credito. Typically, its strongest quarter is the fourth quarter. But interestingly enough, even though that the fourth quarter is its strongest quarter, it's actually trading close to a 52-week low. And so I think this is a great time to be buying into a time when this company has not been seeing as much attention recently. Because with the expansion of all these different companies coming in and the fact that it's growing and expanding so quickly, I think we're going to see some massive upside, not only in the short term, but definitely in the long term. Okay, so the fifth and final stock on our list is Zoom. So as of this recording, Zoom is currently trading at around $183 a share with a 52-week high of $451 and a 52-week low of $177. Now back in 2020, companies that catered to the stay-at-home orders saw some massive growth. And Zoom saw some massive growth in particular, with about a 395% increase in 2020. The problem though is that in 2021, the companies that benefited the most, a lot of those investors started fleeing in 2021, so we started seeing some massive sell-offs. Recently, with the new announcements, Zoom is showing that there is a lot of room for growth ahead, and I do think this is an amazing time to buy. So let's talk about some of the numbers. So Zoom's revenue grew by 35% year over year in the third quarter to $1.05 billion. And not only has the revenue grown, but their margins have increased by well, which is very, very important. And this has allowed adjusted earnings per share to jump 68% to $1.11. So management now expects the revenue to grow to $4.079 to $4.081 billion, up from about $4.005 billion, which is about a 50% increase in revenue from 2020. And Wall Street even expects Zoom to grow by an additional 16% in the year 2022. The good news is because Zoom has fallen back so much from its all-time high of 451, it's finally getting back to reasonably priced levels based on its numbers. It's currently trading around 45 times its next year's earnings and under 18 times its sales. But anyways, those are the 5 stocks that I think that you should be buying in December of 2021 for high growth, also heading into 2022. If this video gave you some value, please be sure to do me a favor and smash that like button. Also, if you haven't done so already, hit the subscribe button, that little notification bell, so you can get more videos like this on everything money, investing, entrepreneurship, living life on your terms. Also be sure to check out some other social media platforms and my website as well. I will also leave some links to my videos in the description box below, but let's get out there and let's build that dream.